Hey guys, listen, I wanted to talk about something. So I've been asked this question so many times recently. So this is like a tax planning thing, but it's not just straight tax planning. People keep asking me, they go, I opened an S corporation this last year and I didn't want to pull any of the money out. I didn't know what was going to happen. So every single person I've talked to that asked me this question, right? So probably a lot of you are like, I get it. I know how S corporations are taxed. They don't know. So what happens in your S corporation is you go in, you earn money, you earn money, you earn money, and that money just piles up all year, hopefully, right? Let's say you make $100,000 in that year. In our example here, we're at $97,261.12. That money is your money, right? It may be sitting in your S corporation's account, but the IRS does not really care what you do with it. Okay. If you want to distribute out that funds to your personal bank account and spend it personally, great. If you want to leave it in the business and use it for business expenses, working capital, buying new equipment, whatever, great. The IRS looks at your profits at the end of the year and says, we're going to tax these no matter where they're sitting. If they're sitting in your personal bank account or if they're sitting in your business bank account, you're going to get taxed the same way. They aren't looking at if that distribution was, it's not like a C corporation, right? When you own a C corporation, or let's say you buy AT&T, AT&T is a C corporation. They pay a dividend. Those dividends get taxed, but so do their profits, right? So C corporation has that double taxation. The S corporation doesn't. It's owned by a small business. It has to have less than 100 owners. There's some flexibility there you can screw around with, but basically it has to have less than 100 owners. Very rarely do I see an S corporation that has more than 3 or 4 owners. Most of the time, it's just you, right? So that money is going to be taxed if you leave it in the business or if you take it out of the business. With an S corporation, make sure that you're running yourself a payroll, right? Especially if you're profitable, you need to be on payroll. IRS is looking for that. Line one of the expense section is owner's compensation. You got to make sure that you're being paid if you're active in that business. But that money truly is yours. Don't be scared to transfer it out to pay yourself. I had one person who was talking, they were like, oh, I was going to take out a loan because I didn't know what to do. Don't take out a loan if you have a big pile of money sitting in your S corporation. Distribute those funds out as long as you're paying yourself a reasonable wage. Okay? So that money, it's your money. Use it as you need. Don't be afraid of what the IRS is going to do. This is when we start talking about tax planning, right? So that S corporation has wonderful tax advantages for you. You're not going to pay self-employment taxes on the profits, where like a Schedule C, if you were just sitting as Schedule C on your personal tax return, you're going to pay those self-employment taxes. You're going to get that qualified business income deduction, which is 20% of the profits. You got to be careful on a couple of things. Make sure that you've got enough payroll if your income's high enough, and a couple other things. Talk to your tax advisor. But here, that once we have this number, that's when we start tax planning. That's when this whole thing that we're doing becomes very valuable, because we go, okay, here's your profits. How can you use those profits, save that money for your usability, and then be able to write that off on your taxes to save you as much money as possible, right? So we don't care about all the expenses and all the revenues that you had. We care about the profits. What do we do with the profits? And then we come in here and we start looking through to see what we can do to reduce your taxes. That's when we pay attention to, on your personal return, how much money are you going to get taxed? What's your tax rate? What can we do to get rid of that money? And that's why we have all of these things. Hey, listen, I love helping you guys out with taxes. If you need some help, and I know that this time of year, what's going to happen, you're going to go to your accountant, you're going to be like, hey, here's my stuff. They're going to come back and they're going to say, here's all the money you owe, and you're going to go, how did that happen? That's why we're here. Reach out, hit me up at davidroofcpa.com or email me at droof@davidroofcpa.com. We'll get you set up with a free tax assessment that we're offering, where we'll go through and give you some ideas on what you can do better for 2025. And there's even a couple of things you can still do for 2024. Hey, anything else other than that? Have a nice day.